Morning cousins, it's Marv Eisen, Timeless Dollar, and today is Monday, July 15th. We're just minutes away from the market open, and we're right over here today. The futures are trading at 30.21. There might be a pullback first in the morning, but we have to just bide our time, wait for an open, wait for the sure thing candlestick signal. Actually, there is no such thing as a sure thing, right? But we want to be sure that we are in the right entry and the market is in favor with our sentiment. Okay, the market has just opened and the S&P is at 30.19, the futures rather. And let's see if it retreats back to the 30.13 opening level. Looks like it is. There's half a point between each horizontal bar on this chart. So just hold off. We're going to wait to see where the traders settle. Remember, the trend has been up. So if we go negative, we're trading against the trend. Of course, the stochastics is the only indicator that I use because it's the only forward-looking indicator. With the morning confusion, the fog of war move, I call it, it might not tell us the true picture. We want to make this as much of a sure thing as possible. And remember, if you are looking to make money in the market, that means you are not looking to lose money in the market. Why do people want to trade? There's only one reason to trade, right? What? Yes, to make money. Not to lose money. Now, businessman's risk is not very different from trading, because as a businessman, if you owned a company where you were selling goods, let's say you had to keep some inventory on your shelf. Well, you'd have to buy inventory, right? You'd have to put thousands of dollars on the shelf in inventory, and you don't know if or when that inventory would ever sell. What's the real difference between that and trading? Trading, it just happens faster. You find out right away whether you're right or wrong, whether your inventory would sell right away or not. Trading isn't that much different. But just like in owning a business, you want to limit your risk to whatever extent possible. You want to reduce the risk down to as close to zero as possible, right? So that's what you want to do in trading. The market's taking a breather here, but again, the trend is up. On this 3-minute candle, let's see, we're 2 minutes into the market. There's no decidedly bad news. We go over to CNBC. Nothing bad on the screen, nothing bad on the horizon. I'm just watching the screen. Mondays, generally, in where there's good news, the market generally tends to trend higher on Mondays. Now, if you're going to place a trade here, where are you going to trade? And why are you going to trade? Well, if you trade to the upside, you're going in the direction of the trend. And being a Monday, the odds are more in your favor, but there's no clear signals on the candlesticks yet. This is the morning fog move, the early morning momentum move is in, and we see it's down about 6 points, down 22. When the market is in a decline, declines tend to be V-shaped, sort of like this, whereas market tops generally take a long time to top out, and then there's a period of indecision, consolidation before it gradually starts edging downward. But declines generally go like this. Proof of that is look at the one-day chart of the S&P futures. Down here on June 3rd, where the market bottomed out, sharp V. And that's a case in point. That's typical of how markets bottom out. Candles getting shorter, as you can see, where buyers are starting to come in. Sellers think the game might be over. This might take a little bit of time to cook. We're at 10:30, and I'm a little bit up. I'll call it neutral in this trade. I was down a couple of $100. My entry was a little bit premature, but I had confidence. The stochastic on the 15-minute candle was at a low, and I entered after a pullback in the morning fog move that I call it, the early morning momentum move. And being a Monday morning and the news being generally positive, I felt comfortable placing a trade on the long side, which I did. So right now I'm up $150 on the trade. I'm not going to sell this trade. So I'm just going to hold on to this a bit longer. It's the end of the day, and it really didn't go the way I had anticipated. The market came down. I bought at what I thought was a stabilized or consolidation area, and I was wrong on that. I was about 1.5 points too soon. So I spent most of the day underwater a little bit. I got out, here's My results for the day, a grand total of $37.50 profit. Well, a small profit is better than a big loss, right? Anyway, we live to fight another day. Marv Eisen, Timeless Dollar.